Gareth, you riding the wave? You joined the bandwagon yet and just start ripping calls or what?
Hey, good to be here, buddy. And just for the record, I'm not a follower. I'm a leader. So I'm actually shorting the market up here. I am shorting the market up here. There's some interesting things showing up in the charts. And I just wanted to point out this thing to you guys, is that if you go back to the .com bubble, the market fell 41% initially and then rallied back 41% before the bigger rollover that took us down 72%. If you go back to, let's say, the Great Depression, the market dumped out 52%, rallied back 50% before dumping out another 70, 80%. A couple other things to note here. If you look at the NASDAQ, guess where it is? Dropped 38% from the all-time highs of 2021. It has now rallied 37%. So these are the types of things as a technician that I'm looking at, and it makes me kind of get in that position of saying we're probably closer to the end of this bull run than not.
Most stocks are crashing. Bitcoin is trying to hold it, and altcoins are also going down. And this is not even the worst. Prepare for what's happening next.
We haven't seen any change in the economic outlook overall. If anything, the Fed has been a little bit more hawkish after yesterday's meeting, and you've seen multiple expansion. It's no one's saying, hey, we're going to go back to this robust growth in the economy. It's more like, yeah, we still may get a slowdown, maybe it'll be a soft landing, but they're not talking about us ripping in terms of economic growth. And so this has really been a multiple expansion. To me, I think the crypto story plays into it. I think crypto used to be where a lot of retail investors were playing, and now that's dead money. So that's bringing money and chasing names like Nvidia and Tesla and all of these type of things. And then ultimately, it's kind of a chase for return.
Dead money. You heard it right from Gareth himself. Love it or hate it, Gareth nailed a few predictions right on Bitcoin. And he's still talking about how markets are still crashing and how the economic outlook didn't change, leading us to believe that there's more downside to come. Especially with the fight between the regulators and the exchanges, Gareth believes crypto is not leading the stock markets anymore. And this time, we don't have a safety net to prevent us from falling apart. While it is still holding around the 25,000 level, we can see it trying to pierce the 24,000 support. And in a few minutes, you will see where it's heading next. So keep watching.
When we talked last, Bitcoin was at 30,000 and change. I said, all right, that's going to pull back. I also expected the overall asset markets to pull back as well. The asset markets haven't. We haven't seen the stock market pull back whatsoever. And you're right. I think Microsoft today hit a new all-time high, or at least touched double top. We've seen Apple make a new all-time high. So there's no doubt I've been early on that trade. But I still do believe that the market, again, is not factoring in what the rise in interest rates on such a enormous a level will mean to the overall economy. I think it's a lagging indicator, and I still expect us to be in recession by year end. Seems like, Bitcoin, because of the regulation, the altcoins especially, they're in this kind of no man's land now where they're not a risk asset, so they're not going up with the stock market. But at the same time, if you hear any sort of negatives about risk assets, there's no safety hedge within there because the SEC put their foot down and kind of basically said, hey, these are almost all securities, and we're now going to sue all of these exchanges. So to me, ultimately, I'm a huge long-term bull on Bitcoin, but I think that, again, at some point, Bitcoin still has another leg lower. I'm not even convinced that the 15,700 level is a low on Bitcoin just yet. Now,
what are the next levels for Bitcoin and Ethereum? Head crypto trader Max from Gareth's team goes through the charts for Bitcoin and Ethereum. Let's have a look.
Let's start by looking at this horizontal yellow line right here. And as you can see, that was previous resistance, and then it broke out through it, and since has come back down and retested. And the first couple times it tested this zone at about 25.2K, it bounced from it, but in its most recent test, it broke down and is now retesting that as resistance again. So where do I expect it to go if it fails this retest right now? So the first zone I'll be looking at is at approximately $24,000. And as you can see, that was a pivot high right here. And then again, rejection right here. So if it continues to fall upon testing this breakdown of support as resistance, then I'll expect it to fall here. If it can't hold 24,000, there's a lot of thin air. I guess the first spot that I'd be looking for it to find support would be right over here at about $21,400. As you can see on the Ethereum chart, it is trading in this rising wedge-like pattern. And what's cool about this is that its current resistance acted as previous support in the bull market, as you can see right here. Now, when looking at its support, you can see that extends all the way back to March of 2020 in the COVID crash. And what's even cooler about that is that there's confluence on the high that Ethereum made back in the 2017 bull market. So if ETH continues down in this zone, I'd expect it to find support at around $14,000.
$1,400, right?
$1,400, which was the previous bull market's high, or the 2017 bull market high, as well as right around this support line that I've outlined here on the chart. So,
Are you still trading these markets or just holding your investments and waiting for better times? Let us know in the comments below, and please watch this video next, where Gareth gives a massive warning of what's about to happen.